Welcome, ladies and gentlemen. We are still in Toronto. PDAC 2019 is over, but we are now today in the offices of Teranga Gold. And with me here is Richard Young, the President and CEO, who wants to give us an update on the company. Richard, welcome and thanks for having us.
Well, great to be here.
2018, I said it already, was a little bit like of a investment year, transition year. Mm-hmm. Maybe you comment a little bit what happened in 2018, what was good.
Well, 2018 was a great year for us at Sabodala. It was our third consecutive year of record production. Mm-hmm. We produced 245,000 ounces of gold last year. We beat the low end of our cost guidance, mm-hmm. and we generated over $50 million US in free cash flow, what we're using to fund our organic growth pipeline, which in the near term is our second gold mine.
Yeah, of course. And your second gold mine, that's also of high interest. How is it going there?
It's going fantastic. So Wahyon will increase company-wide production by 50% mm-hmm. to 300,000 to 350,000 ounces per year. Mm-hmm. It should bring our cost structure down and double our free cash flow from the two operations once it's in full production next year. Mm-hmm. A couple weeks ago, with our year-end results, we announced that the project is ahead of schedule and likely under budget. Mm-hmm. So we've increased our guidance this year from 18,000 ounces to somewhere between 30,000 and 40,000 ounces of gold production mm-hmm. this year, ramping up to 130,000 ounces next year. Mm-hmm. We also indicated with the year-end press release that we were looking to increase the mining rate to deliver more ore to the mill in the event that mill commissioning occurs quicker than we anticipate.
Mm-hmm. Fantastic. That's good news, I would say.
Yes.
Fantastic. If we are staying shortly on the cost side, I mean, that's fantastic organic growth for sure. That's mm-hmm. all fine. On the cost side, you had a village resettlement at Sabodala. Mm-hmm. Yeah. So is this like a one-time event, a one-time cost? First thing. And second thing, what is the difference cost of sales to AISC? I've never seen that before.
All right. Good question. So the first one is the village relocation. Yeah. So Sabodala, the local village, sits on top of our largest deposit on the mine license. Oops. And it's not fully drilled off.
Okay.
So we're currently in the process of moving the village. We've completed all of the community buildings, and we're working our way through building the private residences. Mm-hmm. We've got about 625 families affected. A number of them are renters, about 418 homeowners. Mm-hmm. The process will continue through the first half of next year. The cost will be roughly $35 million US, but it's really a state-of-the-art relocation. It's something that we're all very proud of. The community's very supportive of it, and it's the right thing to do. And that will allow us to complete the drill program on this large deposit and then begin mining.
Fantastic. So that means like that you are giving those people not only a new home, but maybe also like a home with, let's say, sewage, electricity, all that stuff. Yeah,
Absolutely.
It's much cleaner, much better. Maybe some education also. You build some school, medical service.
Absolutely. So in terms of community buildings, it will include a nursery school, a primary school, and mm-hmm. a high school. It will include a clinic. It will include community buildings for youth to congregate. Mm-hmm, mm-hmm. In terms of the houses themselves, so only 20% of the village, as currently constructed, has concrete homes. Mm-hmm. They will all have concrete homes, including fantastic. Concrete roofs.
Yeah.
With the relocation, the homes will be larger.
Yeah.
They'll have proper sanitation, mm-hmm. water, separate kitchen, as well as they will be connected to the grid.
Mm-hmm. So I would say that's like development aid.
It is. It's wonderful. And another item that's important is all the roads will be a proper width with proper drainage, mm-hmm. Which is particularly important during the rainy season.
So definitely, yeah.
It's something we're really proud of. The community's proud of it. It's going very well.
Yeah, fantastic. And I can imagine once the mine is up and running, then it will provide a lot of jobs for those people, right?
Well, we're already operating at Sabodala, so we've got roughly 1,500 employees.
No, I mean, not only Sabodala, also the other one. I mean, you are creating in the whole region then a lot of jobs, right?
Well, certainly the community's building the new homes,
mm-hmm.
so mm-hmm. there's a lot of employment that goes with that, yes.
Mm-hmm. Mm-hmm. Yeah. Fantastic, great. Let's come to 2019.
Well, the cost.
The cost also.
Yes.
Sorry,
All
yes,
right.
I forgot
All
about
right.
that.
So the cost of sales
mm-hmm.
is something that IFRS is brought in. So the all-in sustaining cost is a non-GAAP measure that the industry has used. And the Financial Standards Board have come in and said that you've got to talk about your GAAP measures first. So cost of sales and all-in sustaining costs are differentiated by cash versus non-cash depreciation. So our all-in sustaining costs are coming from the financial statements, and they include our cash costs plus depreciation. Whereas all-in sustaining costs include our cash costs plus capital expenditures, actual dollars out the door.
Okay.
So that's the difference.
I see. So that's like the real all in.
Well, it's really your capital expenditures, whether it's depreciation or it's the actual expenditures during the year.
Okay.
So over the life of the mine, the two will equal because everything that you build that you capitalize gets expensed.
Yep.
But there will be variations from year to year depending on the timing of capital expenditures.
That's right. Perfect. Coming to 2019, you invested approximately $137 million last year. This year, if my mathematics is right, $170 million is planned, like I found in a press release.
Yes.
And so what will be, let's say, the matter for 2019? Obviously, your second mine fully in production, commercial production. Yeah,
that's correct.
When will it be achieved? What do you think? I know it's a forward-looking statement, but
yes,
maybe
absolutely, absolutely. So the majority of that 170, between 115 and 120 million, will be used to bring our second mine into production. We expect it to be commissioned and moved to full throughput in the fourth quarter of this year. So we've guided production increase again this year. So last year we produced 245,000 ounces from Sabodala. We're now guiding combined between 245 and 270,000 ounces of gold production for the year, which would mark the fourth consecutive year of record production. And then next year, once we get the full benefit of our second project in operation, we would expect somewhere between 3 and 350,000 ounces, which again would be a fifth record year in a row.
Wow, fantastic.
Yeah.
So, and that also would maybe mean, it looks to me a little bit like that 2019 is like a bit the bulk of investment, and 2020 it's a bit lower?
That's correct. So once we move through 2019, we'll have construction of Waiau behind us, and the major focus of 2020 will be completing the feasibility study for Golden Hill, which is our new discovery, which we believe will be our next gold mine.
And then you walk up to mine number 3.
That's right. And the goal is to be able to bring Golden Hill into production over the next 5 years and increase production to at least 500,000 ounces of gold per year.
Yeah, fantastic. Do you see any possibilities to bring the cost in the future further down? Let's say below 1,000, for example.
So our all-in sustaining costs last year were $940, similar to the year before. We would expect that our cost profile will decline as we bring our second mine into production because it's a lower cost mine. And Golden Hill, which we think will be our third mine, has better grade than either the first two operations. So assuming that things continue to play out as we see today, that could be our lowest cost mine with that kind of grade.
So within the group, a very good reduction of, let's call it AIC then.
That's right, that's right.
Not the other cost measurement.
That's right.
Okay, perfect. Well, that sounds fantastic, honestly. I think a good growth path. On the other hand, I would love to ask you, as you are doing mining in Africa, at the continent,
Yes.
How do you see the tensions in South Africa? Yeah, we saw a lot of strikes. Even still, there are strikes going on at Sibanye, Stillwater mines. Yeah, how do you see this more as a local event, or do you think this is something hopefully not like a movement?
That's a great question. Investors often look at Africa as being one country, but it is a remarkably large continent.
It's really
South
large.
Africa is a long way away, and there are historic issues in South Africa beyond mining that have created tensions. We don't have those issues in West Africa. In fact, our two operations are non-union. We've got a very good relationship with our workforce. We've never had a work stoppage. And, you know, I don't think many of our peers have had problems either. So West Africa is a very different place than South Africa. Gold mining is relatively recent. West Africa is the fastest growing region in the world for gold production. More gold's been discovered there than any place else in the last decade. And West Africans, including the governments and your local populations, welcome foreign investment and mining in particular. And it's been a real win for both the companies and for the communities in the country.
So no sufferings out of that, I would say.
No.
Okay, super. Let's come to reserves and resources, because this is always the future of a company.
That's right.
You did very well in the last years, so
Yes.
maybe you want to elaborate a bit on that. What have you planned for the, let's say, 2019, 2020?
Well, that's a great question. First and foremost, we've got over 4 million ounces in reserves between our two mines. But for any mining company, first and foremost, can you actually recover that gold? And pleased to report that in part our record results over the past 3 years have been due to the fact that we've outperformed our reserve model at Sabodala. So we implemented new grade control procedures about 4 years ago, and it's paying huge dividends. We've actually outperformed the reserve model by about 25%. And so we've got a solid reserve, and we will be conducting drill programs both at Sabodala and Wahgnion beginning over the next couple of years, where we expect to be able to increase reserves at those two projects. So we expect reserves to rise, and then at Golden Hill, which we believe will be our third mine, we certainly expect with the feasibility study being completed next year that we'll be adding significant reserves there. So we expect reserves to rise as production rises.
Super, perfect. So that means that you are not only replacing what you have mined, you do much, much more.
That's correct.
You are investing in the future.
That's correct. We are.
Yeah.
And then we've got Côte d'Ivoire, where we've put together a very attractive land package. It's earlier stage than Golden Hill, but it looks very attractive. We've had very good results, early stage results, and that could be our next leg of growth beyond 500,000 ounces of annual production within the next 5 years.
Wow, so that's the future of the future.
That's the future of the future.
Fantastic. Last question, something out of Africa, something out of your company. What do you think on the merger mania going on these ones?
Well, I think that consolidation can be very good for the industry. It's got to make sense, and it's got to make sense for shareholders. But it's encouraging that companies are talking, and whether it's full-scale mergers or it's joint ventures, it's a very positive step for the industry.
Okay, so you mean that's the end of the best cycle? Could be.
I think
Last
so.
time it was the same.
Yes, it sure was. And having lived through the past bottom of the previous cycle, there are a lot of similarities.
Fantastic. Well, Richard, thank you very much.
Thank you very much.
Great interview, and looks like Teranga is on track.
Yep, we've got our head down and we're focused on executing and delivering.
Super. Perfect. Thank you very much.
Thanks.
Yeah, ladies and gentlemen, that was Richard Young, the president and CEO of Teranga Gold. And you heard it. The company is organically growing. They're building on their second mine, and it will be finished this year for sure. So they will go in commercial production this year. Yeah, enlarging again and growing the production for this year and for the future. Also, the third mine is already in the vision, I would call it. And as said, the problems in South Africa are obviously more like a local problem. That's good to hear. Because we always, we sometimes hear that from viewers that they are scared about Africa because of GET, but it's exactly not the case. So as what Richard said, in his jurisdictions, it's totally different. So they even do not have trade unions there. They have a super relationship with their workers, and that's how it should be. So they live with their workers, they live with the country, they respect the country, and that's what is successful mining. So check out the company. Thanks for watching us. Bye-bye from Toronto.